Hello, everyone. Thank you for joining us today and welcome to this educational presentation. Now, today I want to talk to you about a high-powered trading technique. This is a very simple but powerful technique that you'll be able to apply as early as today if you'd like. Let me share with you exactly how this works. Let's look at this chart here. There's one in VRTX, all right? Someone looking at this would say, well, yeah, kind of headed upwards slowly but surely, but not very exciting. Doesn't look like it's really going to take off. I kind of don't really have a really strong opinion of this. But with the technique I'm going to be sharing with you today, right here, based on these 4 bars, you would have known that an up move signal had just been generated. And you could have entered anywhere within this scope and potentially captured upwards of 65 points. So this is the very simple but high-powered trading technique I'm going to be sharing with you today. And everything you'll see today is displayed coming from our platform, the BTS Primo charting platform. I developed and designed this with pro trader strategies with one goal in mind, and that was simply to make trading simple and to teach you how to trade at the same time. So welcome to today's educational presentation. My name is Steven Primo. If you're new to my webinars, we have these every Wednesday at this time, usually about the same time and the same day. I've been trading now for almost 5 decades, going on 48 years. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist is just someone who made markets in roughly about 50 or 60 stocks. So in the old days, if you wanted to buy or sell a stock, you had to call up your stockbroker on the phone. He, in turn, would probably put you on hold. He would call the floor broker on the floor and say, I want to buy, let's say, 100 shares of IBM. He would take your order, walk up to the trader who specialized in making a market in that, and one of those stocks was IBM that I made a market in, and then he would either buy or sell, depending on what your order was, and report it back to you over the phone. That's the way things were. A little bit antiquated, but that's the way we made markets. If you ever Google the pictures of the trading floors, those gentlemen behind those large wooden podiums and lots of paper on the floor making those weird hand signals, those were specialists. So I traded through the market in the crash of 87 and the bull market that followed. And in my nearly 5 decades of trading, I have experienced just about every market environment. I've traded just about every market strategy or system. So I know what works in terms of consistency, and I know what doesn't work. So that's why I formulated specialist trading about 15 years ago with pro trader strategies. We teamed up with one goal in mind, and that was simply to educate traders, to put the power back in your hands so that you can become a more consistent trader. And you'll see that in today's educational presentation. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this high-powered technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company only, all signals are strictly for educational purposes only. If you'd like to get more education from us, and rather than waiting each week for a free presentation, please feel free to follow us on X, formerly known as Twitter. There's our handle right there, an abbreviation for specialist trading. You may want to copy that down because every day I post anywhere from 4 to 6 or 7 different snapshots of signals our methods have generated, also little bits of financial wisdom. So you can either follow us on X or simply subscribe to YouTube. We have a lot of content we'd like to share with you, and you get a lot more if you simply hit the subscribe button on YouTube. Now remember, as I stated earlier, we are an educational company only. This means that we're a little bit different from other webinars you may have attended. I see a lot of new names here in our presentation list today. So if you haven't seen our presentations before, we are not going to tell you what we think the market's going to do. Is it topped out again, or is it bottoming out? Do I have the perfect stock for you to buy, or the stock you should sell, or the perfect time frame? You see, that's not what a good mentor does. A good mentor does not trade for you. He teaches you how to trade. So that's my goal, not to simply force feed you signals, but to teach you how to trade with a specialist edge. This was the same edge, as I always say, that was taught to me, and the same edge that has sustained me now going on 5 decades. So hopefully I'll be able to do the same for you as well. Okay? All right. So let's begin today's educational presentation. Now, I want to ask you a question. How can we determine the overall trend? That's a big thing. Think about it. Whenever you lose money, whenever you lose a trade, or whenever you're on the wrong side, it's because you're out of sync with the trend. If the market wants to go up and you've sold short, you're out of sync. Or if the market wants to go down and you're buying, you are out of sync. So obviously, we have to determine the overall trend first. That's the first most important thing we can do. Now, looking at these charts here, here's a weekly chart of Costco. Obviously, the overall trend is up. Here's a daily chart of the Australian dollar. Obviously, the overall trend is down. And here's an intraday chart, a 15-minute chart of MUFG. Obviously, the overall trend is up. But see, this is really easy to see and identify in hindsight, because it's easy to see that they were strong trending markets. But in reality, how can we determine the overall trend? By applying the buy-sell line. This will tell us, rather than looking back in hindsight, it will give us an overall feel in advance of those long sustained trends. Now, I know a lot of you have followed me before, but still there are some of you that are asking, well, what is the buy-sell line? Is this some $2,000 indicator I have to buy, and that's where you're getting me hooked on so that I can only find out? No, in fact, the buy-sell line is just the 50-period simple moving average. So you most likely have access to it right now, whether you're using our platform or someone else's, or just using something online for free. You can plot a 50-period moving average. So here's what we always tell our students. Before you make a trade, before you buy or sell, always plot the 50-period moving average, regardless of what chart, regardless of what time frame. It makes absolutely no difference. But that will tell you, with a high level of consistency, what the overall trend is. Let's go back and look at those charts. All right, how could the buy-sell line have helped us? Well, we know that in hindsight, this was going straight up, right? But once we applied the 50-period moving average, we knew well in advance, way back here, that it wanted to go higher. That's a weekly chart of Costco. We can look at a daily chart of the Australian dollar. How could the buy-sell line have helped us? Well, we plot the 50-period moving average, and once again, we knew well in advance, going all the way back here, that it wanted to go lower, that the overall trend was down. This could have protected you from buying the Australian dollar. It could have helped you to buy weekly chart of Costco. And if you're a day trader, nothing changes. Here's a 15-minute chart of MUFG. Apply the 50-period moving average, and we can all see, once again, the same process applies. So this simple but powerful tool is readily accessible right now. You have it, and you can start using this. And I can honestly tell you, it will increase your odds for consistency tremendously. Now, if you don't believe me, go back and look at your last 15, 20 trades. I can almost guarantee, as I always say when I teach this simple rule, that the reason why you lost money is because you were out of sync with the 50-period moving average. You were probably buying below it, or you were probably selling going short above it. Okay? So we know what the overall trend is, but we still miss the beginning of these big moves. We want to get in right at the beginning, right? That's the low-hanging fruit. So how could we have pinpointed the beginning of the trend in advance? Well, here's the technique I'm going to share with you today, and it involves applying the PET-D. Now, this is a tool I've spoken about many times in the past. This is also something that I took from my days on the trading floor. And let me share with you, for those of you who aren't familiar with what the PET-D is. The PET-D is a proprietary algorithm. The reason why it's proprietary is because it's very difficult to calculate. In fact, in the old days, we used to call it the formula, because it was a formula that you had to use by a hand calculator to calculate almost on a tick-by-tick basis. So we've made it simple and made it a color bar tool. What it does is it simply colors the bars either green or red. So once you apply it, you will see all the bars either colored green or red. They won't repaint. They will stay. Once the bar closes, that's the color of the bar. Now, it's mainly used as a signal confirmation tool. So whatever strategy, whatever method you're using, it will increase your odds for consistency by confirming whether that signal is valid or not by using the color bar system. But today, we're going to share with you something else. We're going to use it as an early trend detector. We're going to find out in advance by using this technique where these big moves are just most likely to happen. Okay? All right. Now, let's look at this chart of Meta. This is going back a couple of months. Now, obviously, most people have trouble finding the trend, because by the time they realize the trend is going up, they decide to buy somewhere around here, and this usually happens right after you jump in, right? So what we need is something that can tell us that the trend has started much earlier, so that we don't have to just guess or wait for a moving average line that's slow or that's delayed, or wait for some or overbought, oversold tool. Let's use something that is really based on a tick-by-tick basis of what the market is telling us. And as you can see here, all you have to do on our platform is click on the PET-D, and you'll see that it automatically changes the colors of the bars. Now, we knew well in advance, once you had a series of green bars back here, that the market wanted to go higher. And once you had a series 3 to 5 consecutive red bars, well, we knew that the market wanted to go lower. So that's how simple it is trading with the PET-D. So what we're going to do today is pinpoint early trends with the PET-D. And this is the technique I'm going to be sharing with you. And that if you have the PET-D or you want to become a student of mine, you can access this and start using it as early as today. Okay, here's the technique setup. Here's what you need. Obviously, we're going to need the buy-sell line, which is just the 50-period moving average. We're going to apply the PET-D. And then lastly, we're going to look to identify a 3-bar pivot high or a 3-bar pivot low. Now, if you're not familiar with what that is, let me share with you what that is. It's a 3-bar pattern. And usually when you have a 3-bar pivot high, you have bar number 1 high here. Bar number 2 is higher. And bar number 3 is lower. So if you kind of connect the dots here, the tops, you kind of form this kind of arrow approach. Now, this is a very ideal generic chart here, but you'll have this kind of look where you have a high, bar number 1, bar number 2, followed by a higher high, and bar number 3, followed by a lower high. What we want to see is this pattern, and that all 3 of these are colored green by the PET-D. Okay? That's the setup. Now, this doesn't mean once we see this, we just buy at the market. What this means is we want to see right above bar number 2, the high of bar number 2. If we trade above there, we're going to buy it. But we must be below the buy-sell line. Okay? We can't be above that. We also must be below the buy-sell line. That's a buy setup. Now, the same thing happens if we want to go short. This is a 3-bar low pattern. Bar number 1 here creates its low. Bar number 2 creates a lower low. And bar number 3 creates a higher low. So then you connect the dots here once again, but now you have this kind of a V approach here. So what we want to do is apply, if we see this pattern, apply the PET-D. And we want to see 3 red bars, okay? Because this is telling us the short-term trend is going lower. So what we want to do is see that we have this 3-bar pattern low identified. We want to apply the PET-D and make sure that all 3 bars are colored red by the PET-D. But this doesn't mean we're just going to simply jump in and sell short or buy puts. We have to trade right below the low of bar number 2, the lowest of the bars. And then we'll sell, but only if we are above the buy-sell line. Now, I know this may seem a little complicated for a lot of you who don't usually trade this way, but I'm going to share with you a lot of examples, and you'll see how simple it really is to apply this trading technique. That's it. All right. We're not going to look at earnings. We're not going to look at interest rates or who's in office or what's going on with tariffs or what's going on with economic reports. We don't care about that. Once again, I've made no secret about this. I used to look at all of that stuff nearly 5 decades ago, and it didn't make me any money. I was on the trading floor. I was in charge of making markets in roughly 60 stocks. I used to know all the earnings estimates to all the stocks I made markets in. I used to know all about the CEOs and the directions they wanted to take their company in. I used to know all about economic reports, jobless claims. And guess what? I almost got fired my 2nd year of trading because I couldn't make any money based on these things. My mentors took me aside and said, Steve, listen, there's no reason to look at that. Sure, if you're investing in a company for 10 to 20 years, sure, maybe you need to know what direction the company's going in. But if you're trading for a week to maybe a couple of months or a year, you don't need to know that. The market tells you just about everything you need to know. And I didn't want to listen to that because I thought there's no way that can work. It wasn't until I started failing more and more by using these, traditional things that I finally let go. And all of a sudden I started to see that, guess what? I was starting to become consistent. I wasn't following any news of any of the traditional wisdom like volume or like support and resistance or overbought, oversold. I was just using a few simple things. And it's the simple things that make you consistent. So that's why we're trying to teach you. This is what the specialist edge is, based on market behavior only. Okay, so let's look at some of these technique examples, and we'll share with you exactly how to go through on a step-by-step basis, okay? All right, remember, everything you're seeing today is on the Primo charting platform, where it's really simple to apply this technique because it's one click away. With just one click, you can see where the 50-period moving average is. You can see what the colors are when you're applying the PET-D. Okay, here's our first chart. We're going to be looking at SBUX, which is Starbucks. And as we can see here, it's kind of drifting up higher, but maybe it's rolling over. Maybe some guy in the chat room says it's getting a little tired. As you can see, it looks like it's going to roll over. And you say to yourself, well, I'm not sure I want to buy this, or it doesn't really get me excited. There's no news coming out. The guy in the chat room says stay away from this. There's really nothing. So this is how you base your decision, right? Off someone or something else. This is not the specialist edge. That's the opposite of the specialist edge. The specialist edge is you use high probability, consistent methods and techniques, and then you make your own decision. So here's the technique. First thing we want to do is on our platform, click on the buy sell line. Remember, that's the first thing we teach you, and it's automatically there. And you can see that we are below the 50-period moving average. So for all intents and purposes, the overall trend is down. So we're not going to be a buyer yet. But if we want to apply this technique, the second thing we do is click on the PET-D. And it automatically changes the colors. Okay. So now if we want to use this technique I'm sharing with you today, we want to look for that 3-bar pattern. In this case, we want to see 3 bars colored green by the PET-D, a short-term high. And what do we have right here? Bar number 1 makes a high. Bar number 2 makes a higher high. Bar number 3 makes a lower high. Creates that kind of an arrowhead approach. So this is setting up for a buy. Remember, we are below the 50, and we have that 3-bar pattern high. So it does not matter what the color of the bars were before the 3-bar pattern or what they are after. All that matters is that you will not buy unless it trades 1 or 2 ticks above the high of bar number 2. So let's see what happened. Well, 2 bars later, it did trade there. So this is the market, not me, not some guy in a chat room, not some economic report. This is the market telling you most likely there's going to be a strong up move. So this was in mid-January, and look what happened. Coming into this month, the stock is up 25 points and pretty much went straight up. See how simple this is? See how simple trading can be when you get out of your own way and release all of this stuff that really has never shown signs of consistency. It's too subjective. Let's look at another example here. This is an Airbnb. Let's say you were interested in buying this, and you say, wow, it gapped up. I missed the whole thing, okay? So this is what's known as a gap. From the close here and to the opening here, there's a large gap of no trading that took place. So technical analysis 101 usually tells us that price comes down to fill that gap. So you tell yourself, okay, well, I'm going to wait for it to come down, and then I'll look to buy. So price actually does come down. It fills the gap. So this is where you want to buy, right? Well, maybe for all we know, maybe it is filling the gap and going to go back up. But if you want to trade this technique, first thing you do is apply the buy-sell line. And price is above the 50-period moving average. So the market, not me, the market is telling you, sure, the overall trend is up. Okay, so that's a good sign. That's a positive sign for the stock. But if we want to look and see if there's this technique available, we click on the PET-D. And we see that the bars were originally colored red, but now, green, but now they're colored red. And if we look here, we see this 3-bar pattern. We have a low here, followed by a lower low, followed by a higher low. So this creates, once again, that type of a V approach. So this is setting up to go short. Now, maybe it won't go down. Maybe it'll keep going up, and you're right. It just filled the gap, and it started going back up. But if it does go down, this is where you want to get out, or this is where you want to go short if it trades 1 tick below. So let's see what happened. Did it go up or did it go down? Well, the very next bar, it actually went down. So much for filling the gap and going back up. So the best thing to do would either be to exit your long position and get out altogether, or if you're a more aggressive trader, buy some puts or short the stock. Because look what happened in the following couple of weeks. It went down 20 points. Had you stayed long or gotten long, you would have had a nice loss on your hands. Here's another example in Amgen. Okay, we're below the 50. We click on the PET-D, and lo and behold, here's that 3-bar pattern again. Now, I know a lot of students will say, well, Steve, isn't it right here? 1, 2, 3. Yeah, but remember, the first bar is red. All bars need to be colored green. So that doesn't happen until right here. 1, 2, 3. They're all outlined green. So we can go long right here. Okay, this was just a couple of months ago. you could have gotten long right here in mid to end of January and 35 points in just a few weeks. Someone looking at this stock here, EA, would say to themselves, well, gosh, Electronic Arts looks like there's major support. I follow this guy in his blog, and he says you've got to buy this because every time it hits that support, it rallies, and that's where the big money is. You have the big institutions and the banks, they're keeping the price up, okay? Once again, this is how most traders make their decisions based on an outside source, either someone or something telling them what to buy or sell. At Specialist Trading, the only source we listen to is the market itself, is the chart in front of us. After all, that's the source of what we're trading. Shouldn't we be getting our answers from that? And so we follow everything based on market behavior. And the best way to determine what the market behavior is to apply the 50-period moving average. So price is above the 50-period moving average. Okay, the overall trend is up, telling us that overall the market wants to go higher. But if it looks like it may be topping out, we apply the PET D, and guess what? Here is that 3-bar pattern, 1, 2, 3. So even though there is so-called support there by the institutions buying, you're going to say, well, listen, the institutions can do what they want, but I follow the market. And the market's telling me if it trades below that bar number 2, I'm going short. Guess what? It did. So now you're anticipating a big down move and 45 points in the next couple of months. Now, obviously, some news or some event came here, as I always say, that caused this to gap down tremendously. But isn't it funny how you knew weeks in advance that the market wanted to go lower? As we look at ROP, we have that 3-bar pattern right here below the 50. This is a classic buy setup using this technique I've taught you today. We went long a couple of bars later, and coming into mid-February, 50 points in less than a couple of weeks, actually. Think you could have done well purchasing some calls or some type of spread strategy with an upward bias? Now, remember, this is not something that is a system, meaning that it has to be exact. As we see, obviously, we are above the 50, and we kind of touch and intersect the 50-period moving average line. So if you want to use a little discretion, that's fine, as long as it's not well opposite side of the 50-period moving average, but we're still kind of hugging it to a little bit above. So you could have used this 3-bar pattern to go short. 2 bars later, it actually did trade there. So that's telling you the team was getting set for a down move, and it actually did. Coming into last week, the stock was down 65 points. Here's an hourly chart of the Swiss franc, all right? An entirely different market, entirely different time frame, but nothing changes. I know a lot of systems and methods change because you're looking at different markets or different time frames. That's the beauty of everything we teach about market behavior. The same market behavior works on an hourly chart of crypto as it does on a 5-minute chart of the E-mini futures. It makes absolutely no difference. The rules are the same. So here we have the 3-bar pattern of red bars, making this kind of V approach. We're going to go short if we trade below here on an hourly time frame, which we did, and 150 pips in a little over 1 day. All right, that's roughly $1,500 per unit that potentially you could have captured. That was an hourly chart of the Swiss franc. Let's look at a 2-hour chart of the British pound. The opposite was exampled right here. As we see now, we're below the 50, but we have 3 continuous green bars making that kind of arrowhead, that 3-bar pattern. You would have gone long on the 3rd of March, just a couple of weeks ago, and 300 pips in about 3 or 4 days. That's $3,000 potentially you could have captured. So that was in the British pound. Let's look at VRTEX. This is the first chart I believe we opened up with. How do we go through the process? Let's take it step by step. First thing we do, click on the buy-sell line. This is why it's so simple on our platform. We made it simple, a very simple process to apply. All right, we are below the 50. Okay, so that's telling us the overall trend is down. Most likely, the stock wants to go lower, unless the PET D creates this 3-bar pattern. So let's click on the PET D, and we see here that, well, we were all red. We had 1 green, back to red. Now we start to be green, and we have a high, followed by a higher high, and a lower high. So that creates this type of arrowhead approach. So that is a setup to go long VRTX but only if we trade above the high of bar number 2. So let's see what happened the next day. Well, we traded there. Now, a lot of people will say, but Steve, we closed lower. That's okay. We traded there, so you are long. Look what happened in the next 2 or 3 weeks, 65 points, not based on any news, not based on what the market's doing. Is it overbought, oversold? Not based on any institutions, based on one thing, learning how to listen to the chart in front of you, the market. It's a lot simpler than trying to understand facts and figures that are too subjective, things like earnings. I know I couldn't make heads or tails of earnings sometimes. I had 65 stocks that I had to know what the earnings estimates were. And I can't tell you how many times they were great earnings and the stock went straight down. Or they were lower than estimated earnings and the stock went straight up. It was just too difficult to understand. But this is much more cut and dry. If we trade above bar number 2, you go long. If we are below the buy-sell line, the 50-period moving average, that's setting up. It's very simple. Now, we all seen what's happened in Tesla. A lot of people lost a lot of money. I know a lot of people contacted me saying, what do I do with my Tesla? Should I buy now, whatever? And I said, well, if you knew how to listen to the market, you would have been out a long time ago, because we go through this simple process again. A lot of people were thinking this was a pullback, that we should get ready to buy. But if we apply the buy-sell line, sure, it may be a pullback, but if we apply the PET D now, we see here that it's giving us signs that it wants to go lower. This was in February, and now we're looking at a weekly chart of Tesla if you're an investor. So we have a low followed by a lower low and a higher low. This created on a weekly time frame that 3-bar pattern low. So people were saying, in March, gosh, what do I do with my Tesla? But if you knew this simple technique, you could have known back as the first or second week of February, well, I may get ready to sell this, because look what happened. The next week, you could have sold your Tesla, the stock that is, and saved yourself 110 points to the downside. So this is how simple this is. There's no reason to look at news or what's going on with the markets or tariffs. Just look at the chart in front of you. It tells you just about everything you need to know. The only trouble is we're never taught to look at that. We're always taught to listen to some guy on TV. We're taught to look at what the institutions are doing and what the earnings are. I was taught the exact same thing. I'm here to tell you that it showed no signs of consistency for me. I didn't become consistent until I got rid of using all those things. So hopefully I'll be able to help you as well. Okay, let's recap what we share with you today. Remember, always apply the buy-sell line, even if you're not going to use this technique. If you don't believe me how powerful that is, go back and look at your last 10 or 20 trades. I can almost guarantee, as I always say, the reason why you had some losers is because you were buying below the 50-period moving average and you were going short above the 50-period moving average. Now, obviously, if you're long a position, you have a nice profit, you can always sell to exit a position above the 50, but we're talking about going short, betting for the market to go lower, okay? So first thing you want to do is apply the buy-sell line, regardless of what time frame, regardless of what market, and then apply the PET D if you want to use this 3-bar pattern, because the next thing you need to know is to look for that 3-bar pivot high or 3-bar pivot low. If they're all the same color and they're in sync with the corresponding buy-sell line rules, well then you can use this simply by applying the PTS Primo charting platform. With one click, you can see if you're in sync with this technique or not. Really simple but powerful. So ask yourself, do you think the PET D could have helped your trading this past year? I just shared with you one of the standard ways to use the PET D. There are literally dozens of ways to use the PET D and apply them that are just as powerful, if not more powerful, than what I just shared with you. It's entirely different techniques based on entirely different parameters, but simply put together can really increase your odds for consistency. So let me tell you about today's special attendee discount for all of you taking the time out of your Wednesday to hear this educational presentation. We are going to offer you the PET D, the Primo Early Trend Detector. This is our roadmap for any market. You're going to get the proprietary color bar algorithm that you can apply to any market. I know a lot of students say, well, Steve, I don't trade stocks, I trade forex or I trade currency pairs and the crypto markets. It makes no difference, okay? Now, this comes with 2 continuation trading techniques, and it also comes with 2 pullback trading techniques. totally separate with what I shared with you today. It also comes with a trailing stop techniques. All right, you can use it also to confirm your current strategy. This is something we didn't go into, but a lot of our students say, listen, Steve, I don't trade any of your methods or strategies, but I use the PET-D to confirm if my strategy signal is going to be a winning one or not. Because a lot of times, if you have the bar that is the signal bar of a certain strategy, if it's a buy signal and the PET-D colors it green, that is a high probability setup that it's most likely going to work. So you can use it as that as well. You'll also get educational correspondence. Now, remember, everything you saw today was displayed using the PTS Primo charting platform. That's how we made this really simple for you to apply. So here's what we're going to do. Till Friday only, the next 2 or 3 days, if you sign up for the PET-D, you'll get a full year absolutely free. Now, not only is this a great offer because you're going to get this to use with the PET-D technique and all those other techniques, but you're going to get a score of other things to apply that you won't find anywhere else, only on the PTS Primo charting platform. These are things that I've taken from my years on the floor. You won't find on any of the major platforms. Let me just share with you a tip of the iceberg of what some of these things are. Okay, you're going to get the one-click PET-D access, obviously, our enhanced buy-sell line, 4 different ways to apply the buy-sell line. We just showed you a very generic 50-period moving average, where we have 4 different ways to apply it to really help you. A strength of trend tool to tell you if a trend is running out of steam or not. A signal scanner. You can scan nightly for different markets, different indices to find out which stocks have a PET-D, a green or a red bar to know if you're in sync. We also have auto-generated entry levels as well as stop placements on the platform, along with auto-generated exit levels as well. Okay, so this is just the tip of the iceberg, but these are all things that you get absolutely free for 1 year, but that's only up until this Friday only to take advantage of it. Now, I know a lot of you are saying, well, okay, I'm still not convinced. I kind of seen the same thing. I've gone to other webinars. And you know what? I kind of learned this technique today, and it looks pretty easy and very simple. I don't really think I need the PET-D, right? I mean, I could just kind of figure it out on my own. So if you're one of the people that think you don't need the PET-D, let me share an example with you to show you how powerful this is. Let's look at this chart here in BIIB, Biogen, all right? Let's say you want to trade this technique. You don't think you need the PET-D. You say, well, listen, step 1, I apply the 50-period moving average, okay? Price is below. Okay, so the overall trend is down. But look what I have here. I found this 3-bar pattern. Here's a high, followed by a higher high, and a lower high. And that's creating this kind of arrowhead approach. So I don't need the PET-D, because if it goes up above this bar, I'm going to buy and go long, and I'm going to take advantage of a real nice up move. So who needs the PET-D when I kind of have the basis of this, all right? So let's say you waited and the next day it did go up there. So you're all excited. You're saying to yourself, this is going to be an up move. I'm going to make 20, 30, 40, 50 points here in the next week or so. And look what happens. Not only did it not work, but you could have potentially lost 75 points coming into this month. So you say to yourself, what happened? Well, let me share with you why the PET-D is so powerful. Because had we simply applied it on our platform, all you have to do is click on the PET-D right here, and it changes the colors. You would have seen that that 3-bar pattern was red, 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 red. So there's no reason to assume that that was fulfilling the requirements of this technique. So therefore, it was not an up move. Now, we have a couple more green bars here, but look at, you need a total of 3 green bars to complete this. Not there, not here, not here, and so on. So you never had the second requirement of this technique. You would have saved yourself 75 points and most likely said, gosh, I think I need that PET-D. So this is how powerful this tool is. Even though you think you know this technique and the rules, if you don't have the PET-D, you may wind up stepping into a pile of you-know-what, to put it simply. So do you now see why you really need the PET-D? It's an extremely powerful tool. I use this on a day-by-day basis. I used it this morning, trading my own account in the E-mini futures. That's how powerful this is. I continue to use it on each and every trade. All right, so let's go back to our roadmap for any market. Remember, you're going to get all of this, the PET D, our roadmap for any market, along with all the different continuation as well as pullback trading techniques, the trailing stop technique, and you can use it on any strategy you'd like. Now, let me show you how powerful this is. Normally, the PET D course and the application go for close to $5,000. Now, if we apply having a full year of the platform, we're going to be close to $6,200, $6,159 to be exact. But we're not going to charge you that much. Here's what we're going to do. We're going to discount it down to only $39.95. You're going to save nearly $2,200, but this is for a limited time only. Now, we still realize that $39.95 may be a little bit too expensive for some people. So because of that, ProTrader Strategies will also have, for a limited time only, payment plans available. So what does this mean? It means that for a fraction of that $39.95, you can still establish a small deposit and establish a payment plan with ProTrader Strategies, and you can be up and running as early as today. Okay, think of that. You don't have to come up with $39.95. You can come up with a fraction of that, establish a monthly payment plan, and you can be up and running as early as today. So whichever way you decide to go, if you want to pay it in full and say, listen, $39.95, I can afford that. That's great. Let me sign up. That's great. You can do that, or you can establish a payment plan. Either way, you'll still get a full year free of the platform. Okay? This is really a great, great offer. Take charge of your trading for the very first time. I know many of you are struggling. I know how difficult that is. I was there some 48 years ago. I told you my first 2 years of trading, I struggled tremendously. So I know what it's like. I think the PET D can really help you. Take charge of your trading, okay? Get the PET D. I'll be there with you every step of the way. Here's how to take advantage of this great, great offer. Contact ProTrader Strategies. They're my sister site. They're in charge of all the discounts as well as all of the payment plans. You can call them directly at this number, area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone or establish a payment plan or just give you a quote, because there's no obligation to purchase anything. There's nothing that's necessary. You can just get a quote and they'll be happy to work with you, okay? But the only thing I would say is that if you're going to be serious about becoming a student of mine, the PET D course, remember, you only have up until Friday to take advantage of this great offer with the full free year of the platform as well as that discounted price, okay? This is a limited time only offer. Now, if you'd like more information, you can either copy and paste that link at the very bottom. It's not a live link. You have to copy and paste that onto a browser. Probably the better thing to do is to go to the chat box. See that little chat icon and the Zoom space there? Just click that on, and once it opens up, you'll see a live link right there, okay? I'm going to leave all this information up here on the screen. If you have any questions, kindly go to the chat box or to the question and answer box. Just type them in, and I will be happy to answer them to the best of my ability. Someone's saying, does this work with the SPY, SPX? Sure, yeah, great question. It works with all the indices. It works with all the different markets. In fact, it doesn't matter. It can work with indexes. It can work with crypto. It can work with E-mini futures, 5-minute bars, because it's based on market behavior. And, market behavior repeats itself over and over again in cycles in any market, in any time frame, and in any direction. So the PET D, when it's applied, doesn't know if it's looking at a monthly chart of Costco or if it's looking at a tick chart of the British pound. It has no discernment of that. It just knows that it's looking for these setups on a tick-by-tick basis, and it's coloring the bars either green or red. So it's a good question, but it makes absolutely no difference. And that's one of the best things I think about not only the PET D, but all of our products. They're easily transferred onto any market in any time frame. All right, so we have very few things that only work in one market. Everything is easily transferred onto another market if you like. So good question, very good question. Anything else? What period to use when? Well, remember, this is if you're asking what the best period is to use, that's the answer you have to come up with. I don't know if you came in late, but remember, a good mentor doesn't tell you what the perfect time frame is. That's your decision, because everyone trades differently. Now, if I said the best time frame is a 5-minute time frame, I could have students around the world that said, oh gosh, I use the PET D. The best time frame is the 2-week time frame. Or someone say, no, the best time frame is the daily or the monthly. Why? Because everyone has different trading parameters. Everyone has different risk parameters. So you have to find out what works best for you. What we always tell our students is to paper trade. Paper trade with a lot of different time frames, a lot of different markets, and see what works best for you. I know a lot of people don't like to paper trade. They say, well, I want to jump into the markets. I want to just start right away and make some money. Well, sure, I know it's difficult, but think of any other profession, any other hobby. No one ever just jumps in. An athlete just doesn't say, well, I haven't practiced, I haven't worked out, I haven't trained, but I'm going to run the marathon tomorrow. Or an actor says, well, I haven't read the script or I haven't rehearsed, but I'm going to start acting in the movie tomorrow or on the play tomorrow. Okay. No one says that. Or an entertainer or singer doesn't say, well, you know what? I haven't rehearsed or learned the music, but I'm going to start singing tomorrow. They don't do that. Everyone goes through a practice or rehearsal period. It's no different from trading. You have to paper trade first to really understand the process. It's extremely important, and this is why we ask people, our students, to do this, and that's how you'll find what the best period is to trade, okay? Someone says, I get a different conclusion using 1 hour and a daily chart. Well, here's the other thing I always say. Trade the chart that your signal is generated on. In other words, one of the main portions or parts of confusion that I found in my trading, and that I find out through all students, is when you combine two different time frames. I know a lot of you have been taught, myself included, that you should look at two different time frames to come up with a good trend. I do not teach that. In fact, I have found out in my nearly 5 decades that there's no consistency in that. Remember, I said at the very beginning, I formulated specialist trading to teach you all the things that I have found consistency in. And I've never found any consistency in using two different time frames. So what's confusing you is that you're using a 1 hour and a daily time frame. Only look at the chart that you're taking the signal on. If you have a signal on the hourly time frame using this technique, that's all you need to know. I don't need to know what the daily is doing, okay? Or if I have a signal using this technique on the daily, I don't need to know what the hourly or the weekly is doing. Remember, that only adds to confusion, and you wait for things to line up, and by that time, you've missed the setup. So I know a lot of you, myself included, have been taught that this is a very powerful way to trade. Feel free to go ahead and use it, but in my opinion, you'll miss a lot of really good setups by waiting for them because they'll be out of sync. And the reason they're out of sync is because there's really no consistency in it. Trade one time frame at a time. There's no reason to over complicate things. Because first of all, the buy-sell line is telling you the overall trend, all right? That, for all intents and purposes, could be an overall time frame, a longer time frame. And the PET D is looking at the short-term trend, which could be a smaller time frame. So there's no reason to look at a different timely chart. Remember, keep things simple. The reason why most traders fail is because they overcomplicate things. It's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify it. I'm here as a mentor to teach you how to simplify your trading. I want all of you to become consistent. I know a lot of you think, well, there's only so much to go around, right? No, there's an infinite pool of profits to be made on a daily basis. So there's not a set number of profits. There's enough for all of us to take. So I want to make all of you consistent. And I think one of the simplest and most powerful ways is to become a student of mine in the PET D course. Okay? All right, if there are no further questions, I just want to say thank you so much for attending. And as we take one last look at our disclaimer, please be sure to watch this video. You're all going to get a link to this video later on. But if you're really serious about becoming a student of mine in this course, take action so you can take advantage of that great discount. Okay, you're going to be saving nearly $2,200, and I'll be there with you every step of the way. Okay. Thank you so much for attending and taking time out of your Wednesday. I look forward to seeing you all in the PET D course. Thank you so much. Have a great day, and I'll see you next time. Bye-bye.